All right, guys, so let's talk about support and resistance, how to identify it, how it reacts in a particular market. In this market, we're going to look at Tesla here. So we're going to talk about the Tesla stock, and we're going to look at the daily chart. Now, rule number one, if you are buying a daily breakout on a stock, you want to allow daily candles to develop. Oftentimes, what do traders do? They play a daily breakout. The stock just broke a key daily resistance. The first 15-minute red candle, they're out. Like, oh no, this is not working out. And they get out of a trade. They don't allow the daily time frame to develop. Vice versa. They play a 15-minute chart breakout, so 15-minute resistance level breaks, and they're anticipating the stock to run to all-time highs, not understanding that the 15-minute candle likely means very little in the big picture. The bigger the time frame, the more notable, as it takes a lot more money, a lot more people, a lot more trades to make it happen. So we're going to use the daily here. So we're just going to be looking at this chart, and we see we're starting to get a breakout on this chart. So if I was looking at this chart, I would say, where is my demand? Where is the demand continuously showing up for the stock? Well, you can see it's down in this range. Down in this range, as it's come down into this zone, it became a buy. It became a buy, went up, it retested this zone over here, it became a buy again. Look what happened, it retested this zone over here, and it became a huge buy. And if we drag this out a little bit further back there, you could see this was resistance on this stock. This was the resistance. We got pushed down, we got pushed down, again we got pushed down, again we got pushed down. Finally, we got a breakout. And then when we came back and retested this major resistance zone, it became support, it became support. So this, which was a previous supply zone, ended up becoming a demand zone, and the stock continued to bounce off of this area, and it never actually came back to that area. Now, if we look up at this zone, we could see we had some resistance up over here. Now, oftentimes when you look at resistance, you just look at that $1 value, right? Like you would look at this and say, well, there's our resistance. It's right at the top. It's $7.28. Doesn't quite work that way, right? Just because you break that resistance doesn't mean you're going to continue to run. It's the manner in which you get there. You can see how the stock ran basically off of $4 all the way up to $8. It had a 100% move when it broke this resistance. So obviously there's going to be a lot of consolidation that's needed after a major breakout like this. So there's going to be an opportunity on this trade when you get that break, but because it's extended now, this is why you can't just trade off of support and resistance. You don't just buy the break of resistance and buy off of support, because you could get trapped in a trade like this, not understanding that you've come from a major move and consolidation is coming because the chart is getting too extended. Now, this was a resistance. We broke up over it and it came back down, and then it ended up acting as resistance again because we didn't establish anything up in this zone because we ran so hard. We did not establish that this new breakout was going to become resistance. This is why just trading off of this ideology of buying off of support and buying breakouts of resistance doesn't work. There's going to be major consolidation periods needed after a crazy breakout like this. Now, you have to identify this in the market. As you're coming up to a key breakout, well, if I was already in this trade, what would I be doing? I understand we're getting extended here. I'm likely going to be looking to take off some profits. And as traders look to take off profits, they had a big run. There's going to be a long period of consolidation. That's what happened in the stock. Now, let's go a little bit further in the stock here, and you can see this continued to be our resistance zone, our supply zone. Anytime we came up in this area, we saw sell pressure. And then eventually there was a breakout here. There was a breakout here, and look what happened when we came back down. We basically retested almost the top, and it didn't come to the penny. And don't forget, guys, it doesn't need to come to the penny. It comes into that zone, and you can see here, it was off by a couple pennies, and it ended up acting as support. And now it started its new cycle in the market as it cleared this major support, major resistance, is off into a new cycle in the stock. Now let's go look at this new cycle in the stock. As you can see, major impulsive move, major breakout happening here. So if you got into this key, which is a monthly weekly breakout in here, and you let this develop over time, you know you've developed and hit a big trade. So let's go look for a new chart pattern here in terms of support and resistance. So you can see here, this chart's really just trending up. We had a little bit of a back test of this zone. You can see this zone was giving the chart minor trouble in here. So we had a little bit of resistance starting up in this area here, all the way from our top here down into this zone. And you can see we revisit it and we ended up acting as support here. Now, drag it out a little bit further. Okay, right in there. Came back, acted as support, and now this chart was beautifully trending to the upside. Eventually, it went through its consolidation phase. And when it came down into its consolidation phase, it revisited this zone in here. And it ended up acting as support. So now we know we've established a new resistance zone up in this range. So we're going to want to see if this is going to end up acting as a resistance level in the future. So you can see we stalled here. So I just want to drag that out now. And I want to get that down into this zone. And that didn't work out because my magnet is on. And let's get the magnet off. So you can see here, resistance came up over here, started to act as a little bit of resistance again. Now let's drag that out a little bit further. And I just want to drag it a little bit lower to this candlestick here. So now as you can see, this chart consolidated back into this zone over here. This is where there was a lot of traffic in this area. So as we gravitated back towards it, the buyers started to come in. This is where the demand picked up for the stock. Now we have supply up over here. So as we gravitate into this zone, we should anticipate to see some sell pressure coming into the stock. We saw it here, minor, stalled in here, and then we had a breakout. But if you look at the entirety of this move here, this is a big move to the upside. So we know there's going to be some consolidation. When the consolidation happens, where should we anticipate the retest to take place? And that's where it took place in here. So remember your time frame, okay? These are daily candlesticks we're talking about. But if we were talking about 5-minute candlesticks, 15-minute candlesticks, hourly candlesticks, it would be the same behavior. As we get back into the zone, we anticipate that this now should act as our support. So if you entered on this candlestick, you made money. If you entered on this candlestick, you made money. If you entered over here, it took some time, but you ended up making money. So buying off of this support, not looking for immediate gratification, immediate satisfaction, previous resistance coming in as acting as support, you had a nice breakout on the chart. So now we've moved away from this section. It looks like we actually revisit it one more time back over here. Look what happened. We came back into that zone and we revisited it. So we had a resistance zone up in here. And very notably, it continued to be resistance for a very long period of time. Resistance, we bounced off of our support. Now we came back up into the zone. Look what happened. We stalled, got a breakout. Now this is a breakout fake out. Now we'll talk about some things to watch out for breakout fake outs in terms of volume later on in the course. But looking at this now, you can see we got a breakout and we couldn't hold. We couldn't get a big move away from the zone. We got a spinning top candlestick. We dropped down. This would have been a red flag in the chart. And boom, we had the big bear candlestick. We revisited the zone, still acted as resistance, And look what happened. It acted as resistance again. So this is a false breakout. Now, what happens is we come back down and we revisited this area. And look at this area. It continues to act as support. The demand continued to establish itself in this area. And let's go look at this part here in the chart and see if it continued to act as an area of resistance. And it did, going up to this area here, to our top. So again, we had support. It came up, it dragged out as resistance. Drag it a little bit further across now. Continued to act as support. This area over here continued to act as resistance. Continuously. Now what happens is, when you lose your area of key support, which was a notable support for a very long period of time, what happens? You get a pretty strong move to the downside here. Now this dropped about 15% on this move once it lost its key support on the chart. Let's look at that here. And let's see, how much of a drop did we see? It looks like an impulsive move. Actually, it was 23%. So we saw a sharp move to the downside. Now, because we came down so strong, we got into an oversold condition here for sure. Maybe earnings had something to do with it here. And then we saw a significant move back to the upside. So let's continue to drag this out, but we're also going to add some down over here. Now let's look at this level on this chart. As we got back into it, it still acted as a resistance. Okay, still acted as resistance here. Now look at this chart here. Bounced, we came back in, Remember, we overshot that area here, right? We overshot it. Too strong, too much, too soon, oversold conditions, boom, ramped right back up. This area still came in and acted as support. Still came in, acted as support. Now this area was our resistance. Still came in and acted as our resistance. You see what I'm saying here? Note these key levels, back testing it over the history of the chart, and recognize as we see big impulsive moves off of our support areas, we're going to still run into resistance back at our previous resistance area, especially in the manner in which you get there. If you get there too much in a trending market, no real healthy consolidation, you're likely to stall. And that's what we're seeing happening in the stock. And it has nothing to do with just the dollar value. Hey, we broke 2020. That means we're going to go now. 2021 is going to be the greatest year ever, right? It doesn't mean that that's going to happen. We have to see in the manner in which how we get there. What has changed? What are the developments in the stock? So now we could see it looks like this chart got its breakout. And when it got its breakout, what do we see here? A potential retest, right? We're still going to watch this. We're going to drag this out a little bit further. We're going through the history of the stock here. Now, we had a little bit of a retest. We held it as support. Looks like we're starting to come back over here and see a little bit of a retest as well. And look, we are acting as support in this zone now. Major historic resistance is now starting to act as support. We have an overshot here. So something significantly happened down and we dropped down in the stock. Let's drag it across a little bit more. Still acting as support. We have another overshot over here. Not sure what would cause this, but we would have been oversold as we got into this condition. Let's drag this out a little bit further. Continue. Now this zone in here, again, we see some buy pressure in here. So we have a new development in the stock. It's right down in this range now. So what I want to do is drag this down a little bit further now, because we can see this area here is now become support, and it's now this level is acting more as a key support zone. Chart, we have a new key resistance zone right up over here. Okay, let's look at this here. Let's drag this out. So we know we're really struggling up in this zone. We see a big move into the zone, we sell off. We see a big move into the zone, we sell off. Another big move, we sell off. Look what happened. We came all the way back down to our previous resistance zone. Support zone. And we bounced off of it. This area, which was acting as support, ended up acting as resistance. Earnings changed the behavior of the stock. And now we had a breakout. And what was the key level we needed to break out of? Was this zone over here. Historically, this was the zone. And then we went on a parabolic run. And look what happened. Look at the area we revisited over time. We came right back into that zone. And now we have a new behavior in the stock. So that's a demonstration of understanding supply and demand zones, support and resistance, and how they continue to come back into play. And don't just look at the dollar value. Don't just look, we broke that level. Reminder, the fashion in which you break it. How did you get there? Has something significantly changed? Is it too much too soon? Are we in an overbought condition now? And now we're likely to go into consolidation and ideally make that area a support level. But if it was too much too soon and we got over there too quick, that's why you can't just trade off of support and resistance.